Hey everyone, Casey Dimon here, and we're talking about tax sales in the state of Arkansas. Now, Arkansas is a tax deed state. In the state of Arkansas, once a parcel accumulates 2 years of unpaid taxes, it is then prepared by the county for certification to the Commissioner of State Lands. The Commissioner of State Lands is the state-run department who handles all of the state's tax sales and sells the properties through their tax deed auctions. They are not held at a county level in the state of Arkansas. The minimum bids are based on taxes, penalties, and interest that are owed on that parcel. It's a very, very standard auction process. The bidder that is willing to pay the most amount of money for the property will become the winner at the auction. The sale dates do vary, but are usually at some point during the summer months. And I'll provide a website shortly that will list all of these auction dates off for you. Now, the tax sales themselves are held at a variety of different locations throughout the state. These include courthouses, hotels, that kind of thing. You can register on site and there is no fee usually required to do so. You can also mail in your bid ahead of time if you won't be attending the auction in person. However, if you do this, you will be required to submit your payment along with your bid if you decide to mail it in. If you're not the winning bidder, of course, they're going to obviously issue you a refund check back to you, but it certainly is some sort of inconvenience. For the properties that are not sold at the auction, known as the leftover parcels, you may purchase them directly from the Commissioner of State Lands upon completing the proper paperwork and submitting all the funds owed for the back due taxes and fees and that kind of thing. In the same situation with these unsold properties, if 2 or more years have elapsed since the initial sale of the property and it still remains unsold, you can then submit a reasonable offer to the Commissioner of State Lands through their negotiated sales process. And you could potentially get the property for less than all the back due taxes and fees that are owed on it. Now, in the state of Arkansas, there's a 10-day right of redemption period for most properties sold at tax sales. Additionally, there's a 90-day litigation period where the former owner can contest or challenge the validity of that sale. So during the first 90 days, you shouldn't really invest a whole lot of money into the property, and you shouldn't really worry about selling it just in case they do contest it. Now, all the properties are listed on the Commissioner of State Lands website, and that address is www.cosl.org. They also provide very helpful links to help you get started with your research, as well as lots of other information when it comes to investing in their tax sales. To learn more about Arkansas tax foreclosure laws, you can simply Google Arkansas Code Section 26-37-101. I really hope you've enjoyed this video on the breakdown of Arkansas's tax sale laws. For information on other states, head on over to taxsaleacademy.com and click on the state guide link. Have a great day, folks. Take care. Bye-bye.